With just over 1 week remaining until the halving event, Bitcoin is shaping up for a significant move. In today's video, we're going to be diving deep into the short-term timeframe price action, discussing the key levels you need to be paying attention to, what the price action is currently doing, and how the price action will be able to push higher. We'll also be going over the macro charts from a technical perspective, going over a variety of different technical indicators, discussing the macro strength. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic end of your week. In today's video, we're going to be going over Bitcoin's price action in extensive detail, discussing what is happening with the price action on the short-term charts and how this strength is developing on the macro. We'll also be jumping into exactly what you need to be paying attention to and what the bulls will need to do to facilitate a continuation higher. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information, no hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us over on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you were interested in taking your trading to the next level, join us over on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our news, our video, our help, and our trade setup chat. If you're interested in getting access to all of that, contact us in the pinned comment of the free channel over here. And to find out more information, click these links. Let's go ahead, guys, and dive on in. So starting on that market data, 24-hour volume is sitting down 18.18% at 155 billion. 24-hour liquidations down 50% as we have seen a significant fall off in volatility, sitting at 134 million. Of the 134 million in liquidations, 82 million have come from long positions and 52 million have come from short positions. Taking a very brief look at the last 24 hours of price action, we can see not all that much movement. More or less, Bitcoin has been chopping sideways within the last 24 hours in about a 2% range, a couple $100 range over here. We did have the PPI data come out relatively bullish, which resulted in a short-term rally for Bitcoin, followed by an equally large correction back toward the downside. Overall, looking healthy on the higher time frame and healthy on the short term. We'll be discussing in more detail what these charts mean when we get into our short-term analysis. Moving over to the broader markets, the DXY has managed to close a daily candle above this horizontal neckline level of resistance represented by this boxed area over here. We can see we are now sitting in this upper macro range of resistance. Again, this is going to be the 105 to 106 zone. Overall, the DXY is objectively now looking relatively bullish, provided we are able to remain again above this uptrending diagonal support line. It is expected the DXY will continue upwards to its next levels of resistance, sitting around that 105.8 to 106 range. It is only if we do manage to break back below this uptrend will we then expect retracements back to these yearly low points at 103. Moving over to the broader markets, the S&P 500, again, not all that much change since yesterday. We did see a little bit of a bump on the smaller time frame. We go down to the daily chart. We can see a little bit of a bump toward the upside. Again, that was following positive PPI data, which we'll discuss in just a moment. Overall, the markets are still very strong. If we're looking from a daily perspective, we can see, yes, momentum has been falling. That, of course, is not a great thing. We do see exhaustion developing on the price action, but like we've said prior, exhaustion with absorption is not weakness, it is strength. So we are seeing absorption as we do have higher levels on the price action as the RSI are creating lower lows. This is an indication that buyers are still stepping in. If we do look at our moving average, we can see we are sitting above that 50 EMA. Yes, we have seen some downward movement in the last few days, but overall, the trend is still aggressively upward. And this short-term correction, like we've been saying, these short-term pullbacks should be considered healthy pullbacks, until the trend flips bearish. It is unwise to hedge against the market direction while the market is moving in the opposite direction. You want to be positioned with the market. It's only when the market changes direction should you change your macro bias. What you do in the short term is very different to your position on the macro. You can be bullish on the macro and bearish on the short term, and you can be bearish on the macro and bullish on the short term. They are two separate things. Do not confuse the two. Do not position yourself as a bull or a bear. I operate in a state of neutrality. I am never a bull. I am never a bear. I simply position myself with what direction is most likely on the time frame I am trading. Overall, again, any correction on S&P 500 that keeps the price action above 5,000 is going to be objectively a healthy correction. We expect continuations. The same goes for the Dow Jones. We can see a little bit of a more brutal correction here on the Dow Jones. Again, breaking below that short-term trigger at 39K, provided 38,000 holds. We are expecting continuations back upwards. It is only if we lose 38K will we expect corrections much lower to the 2021 highs. So let's go ahead and quickly discuss the prior economic data, which was the PPI data, and then jump over to Bitcoin. So we did have PPI data come out yesterday, about 12 hours ago, about 11 hours ago now. The PPI data came in at a reading of 0.2%, so plus 0.2%. This was down 0.4% from the previous release, which was at 0.6%, and down 0.1% from the consensus of 0.3%. So overall, it came in bullish, right? This is bullish news. This is good news. If we do see PPI rising, producer price index, this is the indication that material costs for producers are increasing in price. And generally, when producers' material costs increase in price, those increases get pushed down to consumers and the prices of goods increase. And thus we see a rise in inflation in future periods. So the fact that we are seeing PPI actually coming back down, even below consensus, is a good indication that the rising inflation we have been seeing may only be temporary, and we could see again the market continue this bullish expectation moving forward, provided inflation comes back down. So overall, a good bit of news pushing the S&P 500 back upwards and even giving Bitcoin a bit of a short-term flick. So let's move over to Bitcoin now and discuss what is happening. Before we do, a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go over and jump into Bitcoin. So starting on the short term, we're going to go over what is happening, what we need to see for the bulls to reclaim strength and push the price higher, how the immediate short-term time frame is looking, what we expect next, and the key levels you need to be paying attention to. From a macro perspective, we're going to be going over a bunch of indicators, the market cipher, the Gaussian channel, the Ichimoku cloud, our bull market support band, and our Bollinger Band indicators, and we're going to be discussing why Bitcoin is not necessarily bearish when it is overbought in terms of momentum on the macro, and why this data is actually quite interesting. And well, we're going to be discussing in more detail what this means today. So let's go ahead and get started on the short term and then build up to the macro. So as we can see, guys, this is our short-term price action. A lot of people are saying, well, you've been saying the same thing. Yes, because the market hasn't moved. Unfortunately, we are in a very tight long consolidation now, which has been going on for like a month and a bit. The market has not moved. the validations are intact, the trend is intact, we are just seeing compression and consolidation upwards. So the key levels we have been discussing, the most important levels we've been talking about are still significant. They still remain intact, and we don't control the market. We can't choose when it moves. We can only relay what is happening on a daily basis. So if we hear the same things every single day, it is because those same things are still relevant. So let's go ahead and discuss what we are looking at the moment, guys. Bitcoin is in a uptrend. Again, we've been in an uptrend for a very, very long time, but if we're just looking at the current price action, which is going to be the cluster of price action since that 60K break, okay, we're looking at the cluster of price action since the 60K break-in. We have been in an objective uptrend represented by our higher lows developing along this uptrending diagonal trend line. And of course, we can see during this period, we have had falling momentum. So let's take a look at our structural trend first and then take a look at our technicals. So again, provided we remain in this overall uptrend, this uptrend is holding at support, we will likely continue along this trend and continue upwards. And again, this is not a very steep slope, but assuming again, we remain above this trend line, eventually the price is going to retest or break above. So there are really two options. Option number one, we remain above the trend line long enough to the point at which the price consolidates and compresses to retest the upper level of resistance, resulting in an eventual breakout, or we fail to remain above the trend line, resulting in a correction downwards. We're discussing what we need to see for either of those scenarios to actually develop and occur in just a moment. But when we break down the probabilities, when we break down what are the options for the price action, those are really the two options over here that would trigger continuations. So let's take a look now at our key levels. If we take a look at our horizontal zones, we have got our 60K region, which is this lower range. We've got our 73.8 to 74K region, which is our upper range. And then we have our two ranges in between, the 69K region and of course the 65.8K region. The 69 to 65.8K region is our neutral zone. If we go over to a higher time frame, you can see this zone is the distance between our weekly close and our weekly high of the 2021 all-time high. This is going to be our neutral zone and our last level of major resistance on the weekly chart for Bitcoin. We can see we've been struggling with this level now for a couple of weeks. We've had wicks above, wicks below, wicks within, candles above, candles below, and we are still sitting just ever so slightly above it. So overall, it is looking strong. While we are sitting above that level, of course, we are sitting above that 2021 all-time high. So provided we remain above it, we should be expecting a continuation upwards on the higher time frame. So taking that back to the smaller time frame, we can see that is going to be our neutral zone. Below our neutral zone from 65.6 to 60, that is going to be our short-term bearish zone. And above 69 to 74K, that is going to be our short-term bullish zone as we are sitting above the 2021 all-time high. So if we take a look at the current price action, talk about distances and ranges and expectations, we would assume that a break above the 74K region would result in a macro continuation upwards as we would be breaking into price discovery, validating a likely monthly candle close above 74,000, breaking the 80 on the RSI, and again, breaking out of the current 2-month long consolidation range, which will result in a continuation upwards. A loss of 60,000, however, would send Bitcoin downwards quite significantly, filling this quite significant VRPV gap to around 58,000 and potentially down to 52,000 if 60K is lost. But like we've been saying, the likelihood of 60K even being retested while Bitcoin remains in a uptrend is significantly lower than the likelihood of a continuation back upwards to retest 74. Again, it's not impossible. No one said impossible. There's nothing in trading that is about certainty or impossibility, but there is about likelihood and probability, and the probabilities remain in the fact that the price will continue with its current trend, provided the trend is holding. Unless there is a significant shift in the perception of future bullishness for buyers, there is unlikely that key structural levels will be broken. Don't think about the price action as just price action. Think about what would result in all of the buyers in this range, or the buyers in general, deciding to push the price and sell sub 60,000 when we have the upcoming halving, when we know interest rates are potentially going to be reduced at some point in 2024, when we are entering price discovery, when we have the expected parabolic phase of the bull market around the corner. The price moves not because the price moves because people decide to buy and sell. So when you're looking at analyzing direction on the macro or direction in general, don't think about what the price action is doing. Think about what buyers and sellers are potentially doing. And when we look at buyers and sellers, we have to look at the data. We have to look at the strength behind buyers and sellers, the shifting strength behind buyers and sellers. And that is when we look at technicals. So I always say, guys, the price action itself can be deceiving. And if you're making decisions based on what the price action is visibly looking like, you are always going to be misled to some degree, as you have intrinsic biases based on the look or how things look as a trader. You have to look at the data behind the price action. What is the strength telling us? Does the price action have strength? And strength and weakness are objective measures. These aren't up for interpretation. These are objective measures. Either there is buying strength or there isn't. There is strength in the price action, or there isn't. There is a yes and no answer. So let's take a look, guys. What can we see? From a technical perspective, we absolutely still have strength. Like we said before, guys, we can see that the momentum has been falling. This is exhaustion. This isn't weakness. Falling momentum isn't weakness. It is exhaustion. There are two different things. It is developing weakness. Developing weakness and weakness are not the same things. They are two separate things, okay? We're developing weakness in a uptrend. However, what we can see once more is that we do have absorption as we are creating these higher lows in the price action while we are now in this downtrend on the RSI. So we do have a degree of absorption occurring across our time frames, which is telling us that buyers are still stepping in, we still have strength, we still have buying pressure coming from this level and pushing the price upwards as of right now. So we do have strength. Now for the price action to officially continue upwards, of course, we need to see positive momentum. We need to see that exhaustion dissipate and return back to aggressive strength. So for that to occur, we need to see that RSI break that trend line. We break that trend line, we break 74,000, we continue upwards. So let's now talk about the immediate short-term price action going down to the hourly chart. What we can see here, guys, on the hourly chart is Bitcoin has been traveling now in a new downtrend. We have developed a higher downtrend. We have our RSI trend lines to validate this. Again, we use the peaks on the RSI trend lines matching up with the peaks of the price action, okay, to validate our confluence points between the price action and the RSI, which is going to be a representation of momentum and overall strength. What we can see, this is our short-term downtrend right over here with our arrows. We can see we're pushing downwards. We were looking for a RSI break, a positive momentum shift on the smaller time frame for the price action to break upwards. If we do break upwards, we are actually expecting a continuation to retest 72.5 or even potentially 73K on the short term. Again, provided we remain above 69,000, the bulls have control on the short term as we are in the short-term bullish range. If we do continue toward the downside, we would need to lose our prior higher low, okay, sitting at 67.5 to result in a continuation to retest our 66K region. Again, a retest of the 66K region is a retest of the confluence point of the uptrending support line, which has lasted 1 month, as well as the lower range of the neutral zone, which is going to be the weekly high on the weekly chart of the 2021 cycle. So we do have a double area of confluence of support right over here, and for us to enter a downtrend, we would need to break below that. So again, it is all about probabilities. It's not about emotion. We're not sitting here emotional. We are about the facts, the data, the probabilities. This is what it is. If you want to trade against it, by all means, go ahead. I'm not sitting here trying to convince you. In fact, I'm not trying to convince anything of anyone. Anyone of anything. I don't really care what people think. I don't even care what I think. I follow the facts and the data and the charts. Simple as that. So let's go ahead and take a look at the macro scale now and take a look at what is happening on the macro. We're on a 2-week chart over here. Let's take a look at some of our indicators. So we've got Bollinger Band. First and foremost, what we can see is the Bollinger Band is looking very, very good. If we go down to a weekly chart, we'll see in more detail exactly what we have seen in prior cycles playing out once more. So what we can see generally when we actually break above the Bollinger Band middle line and retest the upper band of the Bollinger Band, we remain above that midline. Okay, so we can see we are retesting the upper band of the Bollinger Band over here. We're retesting the upper band, retesting the upper band. We remain above the midline of the Bollinger Band until after the top for Bitcoin. So for us to say in hindsight, and yes, it's going to be in hindsight, it's very hard to predict the exact top, okay, particularly this far out. But if we do see, this is invalidations, right? If we do see the price action break back below the Bollinger Band midline, we could say with certainty, based on historical data, it is likely the top has been in, and we are now entering a bear market. So until that happens, the price action is expected to continue upwards along that upper band against the midline into, again, that parabolic phase to eventually create a new top. So from a Bollinger Band perspective, we are looking still strong. And again, the Bollinger Band is a reflection of overall volatility on a higher time frame. If we take a look at something like our market cipher A, we can see a similar scenario over here. What we generally have is, after the bear market, we end up creating a blue triangle, okay? Now, the blue triangle is very interesting on the weekly chart is because the next time, okay, we continue upwards through that 50 MA, okay, we remain above that 50 MA, and the next time we create that red cross after creating a blue triangle, I butchered that. So we create a blue triangle, we break over the 50 EMA, and the next red cross we make, okay, is generally after the top has been in. So what does that tell us? If we do see another red cross on the weekly, that could indicate, we're going to see another scenario over here, that could indicate that we are potentially creating a top or have been creating a top for the last few weeks. That is going to be another top invalidation signal. Let's take a look at another indicator, the Gaussian channel. We're going to take a look at the Gaussian channel on the 2-week chart. We can see on the 2-week chart, we are seeing something we haven't seen since all the way back in 2016, and that is going to be the Gaussian channel changing from red to green. The last time we saw the Gaussian channel change from red to green was back in 2016. Again, a strong indication that the current trend is shifting and is gaining strength as it is continuing upwards. A very, very healthy thing. So guys, I can bring up a whole bunch of indicators and show you a whole bunch of things, but at the end of the day, it's important to realize that the indicators are a reflection of buyers and sellers' decisions over a period of time. The most important thing is what is moving the buyers and sellers to make these decisions, which is then reflected in the price action and then derived from the technicals on a macro scale. And the answer to that is economic policy, governmental policy, taxation policy, interest rate, and economic data, okay? Which is all going to be formulated into something called perceived systematic risk. The market is a representation now of what people expect in the future. It is based on perception of future risk. So we do have an environment cultivating a lower risk environment in the future. The market is going to respond positively now to match what it expects at a later date. It is forward seeing. So when we look at the notion that interest rates are going to be falling later in the year, we see data to support that. Again, lowering PPI, the Federal Reserve meetings, press conferences, all validating and confirming we are expecting to see a pivot later on. We see the government buying bonds back, behind the scenes, all these things that are representative of quantitative easing later on. We can formulate that the macro drivers that are pushing buyers to actually buy on a macro scale remain intact, and provided those narratives remain intact that move buyers to actually make those decisions to buy, the price action will likely continue upwards on a macro. It is only when those narratives start to shift and flip on the head, we will see a reaction toward the downside. The same thing, guys, I use to predict the top back over here, the bottom back over here. It's the same thing we've used all the time because these models, okay, of perceived systematic risk remain intact because these are actual drivers of what determine buyers and sellers to do. And buyers and sellers determine the price action. So analyze, if you look in the macro, not the short term. Don't worry about what Bitcoin's doing today and tomorrow. Don't worry about Bitcoin dropping 2% or Bitcoin consolidating sideways for 2 weeks. It is completely irrelevant in regards to where the price action is going in the macro. If you look at the macro scale, you need to look out at not what the price action is doing, but what is moving the buyers and sellers to make decisions, which is influencing the price in a certain direction on the macro. And provided those drivers of price action, okay, those drivers that are pushing these buyers and sellers to make those decisions that moves the price action remain intact, then it is unwise to assume the price action is going to randomly reverse against those drivers. Thank you for watching. Have a fantastic day. See you guys on Sunday. Have a good one. Bye.